What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is September 2nd of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to do a major update when it comes to Bitcoin, altcoins, Ethereum, the broader macrosphere. There is some very significant price action going on right now, and I want to try to break down how bad things could get here if we don't start to see something give here in the next few days. I want you guys to be prepared, not only if you're already exposed to positions, but also if you're in cash and you're wanting to strike and find those buying opportunities. So we got a lot to unpack here in today's video. We're also going to be talking about the macro, Nvidia, the stock market, the divergence between crypto and equities we've been seeing over the last couple of days and weeks. We got a lot to unpack here, so get a cup of coffee, consider dropping a like if you enjoy the content, guys, and stick with me here. I think you guys are going to enjoy this video. Now, I did want to let you guys know real quick before we dive into the Bitcoin analysis, we recently did a review for the Gonna Make It or GMI airdrop. This is one of the big ecosystem projects for energy. If you guys happen to miss it, definitely go check out that review. It basically is all about how you can participate in this airdrop. There's a ton of ways you can participate. You don't have to risk any capital or anything. There's two big things I want to let you guys know about. There will be additional seasons. If you happen to miss this one or you're too busy right now, don't worry. You can go back to that video. There's a link there that's going to help you to boost your rewards, and you can participate in season 3 and season 4. They usually be recurring on a monthly basis. But you can also check on the leaderboards where you stand for some of the big prize pools here for the GMI token. So definitely don't sleep on that, guys. Really cool campaign that's going on at the moment for one of my favorite ecosystems. But let's go ahead and dive into the analysis. So I want to go ahead and talk about, again, general price action and the moving averages. So let's just kind of clear our chart here. Let's start off with the basics and just take a look at price. There is no denying here, guys, at this point, I think. I know some people would have maybe disagreed on it and kind of debated it. I don't care if you're bullish or bearish here, guys. We got to be honest with ourselves that this is clearly not just sideways consolidation. We have 4 significant lower lows and multiple significant lower highs, especially the recent one we set back here from our previous video. Back here on Sunday or Monday, on the 26th, about a week ago, we were trading around $64,000. And since then, we flushed down here, very clearly showcasing that this is another relative high here, a lower high than the prior one. And that's a pretty significant drop compared to the previous one versus others, where we used to come back up to that $70,000 range. We weren't able to do that this time around. Not to mention, if you just look at price here, we've got significant lower lows that are picking up an acceleration. This is not a typical accumulation pattern. I'm not here to say that we can't come down from one more flush and then bounce back up. But I'm saying right now that that is not happening, and it has had multiple attempts to do that. Not to mention, this is the longest stagnation we have had at a prior all-time high range. I really want to emphasize that here. We have been at this range here for more than, coming up here on nearly 6 months since back in early March. 6 months. So this is, again, I know a lot of people were saying, oh, we're making this range support here, the prior resistance range. I think we're spending a lot more time below that price range versus being above it. So I think it's imperative to be honest with ourselves here, that this is not some kind of accumulating consolidation range. Maybe some people are accumulating here in the dips and buying that sell side pressure, but this is not a typical consolidation range. That's the first thing. But if we take the moving averages into account here, things unfortunately don't look much better for Bitcoin. The moving averages tell us a story here. They are averages of, the average price over a given set of trading days. And crypto trades 24/7. And what we find here is that essentially, whereas back here in February we had clear trend, this is when we started building a lot of our positions in altcoins. We started taking a lot of risk in the market after being relatively cautious, right? But we captured a lot of the upward move here, the kind of later stage here where there was clear momentum, and that's when altcoins really did phenomenally well. Meme coins were off the rockers, and you can see price was not even coming down to touch that 21 day. But when we started to stall here back in April, that's when we really started to take our positions off the table. The 21 day was not our friend anymore. Price was chopping around it. And until we really had that trend validation, we stayed back, we waited. And what do you see since then? You see that we're spending a lot more time below that 21 day moving average, more and more as time progresses. Not to mention, you have the purple line here. Those purple lines are the 100 day pocket, the 100 day moving averages, and the 200 day moving average, the blue lines here. Those used to be means of support. We saw buyers coming back here just like they did back in January. drive up price, but we still set in a lower set of highs here, and we move back down. And then we try to see, could the 200-day become support at a relatively similar price range? The 200-day was temporary support and drove up prices. And what do you see after that? A lower high, and then we bring down to those new flash lows here. So what we're seeing here, if we're just being honest with ourselves, we're just taking a look at the moving averages, not trying to speak with our biases, not trying to talk about what we hope is going to happen or what we hope is happening. We see very clearly that the previous moving averages, mind you, again, at much higher price points here, right, are no longer serving as means of support, but as resistance. That is not a good look here, guys. It is not a good look. And we just have to be honest with ourselves here. And to put it matters even more into perspective, right? You might see that I have a lot of moving averages here in the chart. I usually don't have all of them on, but there is a set of moving averages that I wanted to even show you guys here, which are our short-term trading moving averages. The things we usually use for like meme coins and like altcoin swing trades, very short periods of time, that are all around momentum. But this speaks to the story here that even in the short term, we are not spending much time at all above the 9 EMA on the 4-hour time frame. That's that light blue line. We have the 21 4-hour EMA here. And just look at that. Each and every time we had a little period of time where we came up here, it gets shot down immediately, and we just can't seem to get above there at incredibly lower price points over the last couple of weeks from where we were. Again, we didn't even come up to test that 70K range. I know some people take that as being really negative. That's just what the chart is saying. It's just what the chart is saying, guys. And there's a reason for this. It is a reason that we cannot ignore in the same way that people were euphoric about it over the last year, from the fall of 2023 to March of 2024. And that is the Bitcoin ETF. And more specifically, the continued slight growth that we see from time to time, if not neutral to negative outflows. Right? We're seeing outflows here, right? Which is a net negative for the ETF and for Bitcoin. You are seeing essentially sell-side pressure come from these ETFs. People moving capital out of the ETFs back into cash. 1,782 Bitcoin were sold back on the 29th. Now, I'm not using one negative day to spook you guys. Right? You can go ahead and take a look at, capital like a CC15 Capital. There's a whole range of people on Twitter who are tracking those metrics. But what I find really interesting is that a lot of these accounts sometimes, I'm not trying to call it anyone and stuff, they're not entitled to put out this information for free. I appreciate that they do it. But you see like less posting about those ETF flows. And if you really look at the data, it's not looking good. The growth has stalled to a large extent, especially during this period of time where there's been the German government selling, Mt. Gox distributions, all the big ticket sell-side events, which have clearly had an effect on price. But we're not seeing major buyers come in to really scoop up all those Bitcoin. We're seeing a total net outflow of Bitcoin here, and some even coming not just from GBTC, but also from the ARK ETF, from the new players here on the block. More inflows are actually coming out from the new ETFs with lower maintenance fees. That is a very important point to keep in mind here. So this isn't the typical, it's the temporary GBTC outflows, which still would matter, right? We can see very clearly here, it's not looking good. Not to mention, if you look here, again, this is just taking a look at the last couple of days, you're seeing a lot more big red numbers here for outflows versus new inflow numbers. And we can just take a look here from the last couple of days of August, right? You'll sometimes have a big ticket day here where a couple 100 million come in, but then after that, it stalls and you see multiple ETFs here just bleeding here, people moving capital out. Right? So this is not something we want to see here for the ETF inflows. We want to see that we're maintaining, as I've talked about here on the channel, those 30, 50,000 Bitcoin purchase cycles per month, right? A positive inflow, about 30, 50,000 Bitcoin being purchased at a minimum, if not more, if we really want to start accelerating, because we've seen clearly that is what is needed to at least sustain prices where they're at to face the distribution and sell side pressure of previous holders. Not to mention, I've seen a lot of people, like again, Hodl Capital was showing that the Australian ETF is still stacking here. Yeah, they're stacking like maybe a Bitcoin or a couple Bitcoin a day. And I understand for a lot of people, like if you're thinking on an individual level, like wouldn't we all want to own 100 Bitcoin, right? Yeah, of course, right? That'd be awesome. Like you'd have millions upon millions of dollars. This is in Australian dollars, but in US dollars, millions of dollars, right? But I know people who hold that much Bitcoin themselves, and the Australian ETF, the monochrome Bitcoin ETF, IBDC, has only 123 Bitcoin. Like, that's not exciting. You look at all the other international ETFs here. It's just trying to be real, guys. Again, I don't want to be pessimistic. I do want to talk about some of the opportunity here. But it is important to be realistic about things, especially when you're risking your capital, guys. Don't fall for narratives at the end of the day, like especially when momentum is not there. Right? It'd be one thing if there was a lot of people just relentlessly buying into the market. We are just not seeing that here. It's very, very clear here with the inflows. And I'm not just here to bash Bitcoin. Here to talk about the next best player here, Ethereum. ETF was a huge narrative for Ethereum. Got a lot of people really excited. And yeah, sure, we've got here between all the ETFs right around a little over 500 million in AUM. The flows for that have been neutral, if not negative, ever since. It's been really not a good look here for sentiment. And I think it's proved a point that we've talked about for a long period of time here in this channel, which is that whether people like to admit it or not, the biggest thing the ETF really brought was not new inflows, but a cheaper way for people in brokerage accounts to invest in crypto assets. And I think a lot of people, unfortunately, overestimated just how much liquidity was waiting on the sidelines to buy these new exchange traded funds, these new ETFs, because we already had the grayscale version as well as GBTC for Bitcoin. It's just that the expense fee was quite high. And what you generally see is that you see outflows, and those inflows, a lot of that capital is rotating back into those prior ETFs. So I'm not here to say it's all doom and gloom that money is fleeing from the markets, but you're not seeing these new means of getting exposure to the market that would set spot demand for Bitcoin and actually help price. You're not seeing them bring in new inflows to any significant degree. Not enough to be able to sustain heightened acceleration in price. And you don't need me to tell you that. You can just look at the chart. It's all about being honest with yourselves, guys. Lower highs and lower lows is not a good look. Spending a lot more time towards the 200-week down below the long-term daily moving averages versus where we were, and not getting a lot of buyers coming in, down being down 40% from those relative highs. Mind you, we didn't even make it up to the prior highs of the last cycle at $5,000. What does that tell you about sentiment? Even if you were to ignore the fundamentals, which are lacking, even if you were to say, but there's always going to be speculation coming back in. There's always some new narrative, yada, yada, right? Price isn't showing it. And until I can get above that 21-day, I'm really not interested. I want to see if we're going to have to consolidate for a while, that's fine, but I want to see a nice couple days above that 21-day, and then I can feel confident, hey, I'm going to buy into the trend. I've got momentum there. That's how any smart trader would approach it. We don't just buy and hope in this case, especially for something like crypto, which can give up so many of its gains so quickly. All right, take a look at the ETH-BTC ratio right back down near that low range. And again, same thing we talked about here. Those short-term moving averages, look at how perfectly they're playing resistance. For the last, last week here. This is more than a week here. Yeah. Oh, no, sorry, this is back on, sorry about that. It has been a week. It's the 23rd of August here. We used to at least get above those moving averages temporarily. Now every time, shot down. It's good to see that, it's holding up here in the short term, with the lows. Maybe we get a spring up. But until that happens, I'm just here to help you guys not waste your time and to help you avoid catching falling knives. And this also goes for the altcoin space, other coins. Right? The meme coin craze is not coming back in a significant way. Volumes on Solana and a lot of networks are slowly kind of dwindling here. I take a look here at the metric for others. Again, as we talked about back on Monday, if you can't hold in that 21-day, there was a battle between the moving averages here, the 100-day and the 21-day. If the bulls can find support there, this is going to keep bleeding through. And we've gone from around, at that time, probably recording around 208 billion to 185 billion. We're back in the 200-week pocket, and we're just kind of chilling there. Not bouncing off strong out of it like we did last time or the prior time here. We're just kind of hanging out there. And the more that happens, the more it's showing you that for the last 200 weeks, this market has not done much, right? We had a great run up here, but if you've been holding positions since back here and you've locked in some life-changing returns that you've just been holding, and you're starting to sit on your hands and think, maybe I shouldn't be sitting on my hands. I should probably be doing so. I should probably be looking to see whether or not this thing is going to actually take off, or I need to close my positions. And that is what leads to the kind of consolidation that could lead altcoins going even further, right? I think it's a very important thing to understand here, guys, that maybe the 200-week does hold here. We've got this long-term line of support since December 2018 that, again, we have yet to break, minus the COVID sell-off here back in March 2020. It was definitely a bit of an anomaly, I'll give it that. But you can see historically that this is kind of the range where buyers have come in here in the past. And I definitely am interested in taking risk at these levels, in the right narratives and the right plays, but I got to see that momentum return to the market. And I think a big thing people have to keep in mind is that it may very well be the meme coins, the baseless speculation is not going to come back. People are going to look for more fundamental plays. They're going to look for exciting narratives, something that people can actually believe in. I think that the meme coin phase was a kind of potentially a one and done kind of trend here in crypto. Maybe it comes back in some meaningful way in the future when momentum returns, when people are more speculative. But for now, people need something serious. They need something that's genuine, something that's actually building useful technology, a useful platform to build on, real decentralized applications. One of the protocols that I definitely think you guys should be keeping on your radar, plays into the layer 1 narrative, is Aleph Zero. They're our partner here on this channel. If you guys, again, have not been diving into Aleph Zero, as well as other names like Radix and Energy, some of the projects we talk about here, I highly recommend you guys do that. And now Aleph Zero has got a big governance vote going on right now within the government system for Aleph Zero. They are voting on the token economics and essentially whether or not to cap the supply of A0, the native currency of the network. Now, this is a huge step forward for A0 because at the end of the day, not only is there already a lot of people already voting yes, it's probably going to pass this initial proposal, then the details essentially of whether or not how much that supply is going to be capped at, etc., is to be determined at a later date. We can see here very clearly that the token economics here are playing to the benefit of A0 here by maximizing or capping the supply in A0. So with a lot of votes coming in here, I think overall this is going to be really interesting to see how it plays out. And I definitely think it means that you should be watching protocols like A0, keeping them on your radar. And again, setting the same standards. If you're talking about from a trading or investing perspective, I'm not here to just show it to you guys. I think it's a cool project from a technological standpoint. They've got some great ecosystem development, some major corporate partners on board, which speaks to the ability of having privacy built in to the network versus other traditional layer ones like Ethereum or Solana. This is a big narrative, I think, that's going to develop in this cycle for L1s that are privacy centric, that will allow for enterprise DeFi, enterprise blockchain and smart contracts, really a kind of underserved area that could lead to the next wave of growth of capital and users. But I think above all, this will eventually play into the benefit for the token price as well. So keep an eye on that as time passes here. If you guys want to check it out, check them out at alephzero.org. I'll leave a link down below in the description. And if you're an A0 holder, vote on the governance proposal, participate. It's definitely a good thing. All right. Last but not least here, guys, I want to go ahead and talk about the macro sphere, talk about what's going on in equities, because this is, again, where I want to kind of bring your attention. If you're someone who's more focused on crypto, if you've made it this far, and you also like watching the macro section, or maybe you don't like watching it and you're still here and you're listening to me ramble, then stay with me here because I think there's a lot of opportunity here, and I really want to emphasize this as a friend, guys. There is, as someone who's traded traditionally in equities and then went into crypto, and it made life-changing returns in both markets, really mainly in crypto for sure because of the multiple potential, but in equities as well, and in commodities and Forex, I'm constantly looking across the board. I'm taking a 360-degree look at all markets, checking multiple charts, and really trying to figure out where the opportunity is, because if I can do that and I can start to filter it down, it not only gives me more opportunities to make money when other markets might be dull or may not be a good place to invest, but beyond that, it lets me really find out where the best yielding opportunities are going to be. And what we see here very clearly is that unlike Bitcoin that is really struggling in that terms, right? After the recent sell-off we saw in a lot of the technology companies and just kind of the broader market throughout the month of July, we've seen a much stronger rebound here. We're holding on the 21-day moving average for the Mag 7. This is an ETF that tracks the Mag 7, so that's NVIDIA, Apple, Microsoft, Tesla, Amazon, Google, a lot of the big technology companies out there that a lot of people usually have been kind of chasing exposure in. So those are holding on their 21-day. You also have NVIDIA as well, which while on the earnings release back last week, it dipped a little bit here right? We saw this kind of 6% down move here. We're still holding on that 21-day pocket, right? So I think above all, it's really interesting to see that whether you're looking at specific stocks, broader conglomerations of equities like the big technology companies, or you're taking a look even at the NASDAQ here, right? That's exactly what you want to see here for a continued spring up here, is that bounce on the 21-day. And this is at a time, mind you, right? I'm not going to, sugarcoat it. We're at a period of time where I would expect resistance to play out to some extent because for the dot-com bubble here in 2000 aligned with the prior highs back here in November 2021. As we saw very clearly here, also in July, this is going to be a heavy point of resistance for markets to clear through. But to see buyers coming in such a strong way off that dip to the 200-day, right? That is definitely very interesting. There's a lot more strength in price. I'm not saying to go absolutely long in equities, but I want to bring your attention to a very important chart that you possibly haven't seen before, or if you've seen it before, maybe on this channel, which we have covered it before, maybe you haven't seen it in a while. This chart is the Bitcoin to NASDAQ ratio. And I bring this chart up not so much to talk exactly from a trader's perspective. It is relevant for more active traders, but I hope for those of you who may be listening and who are more of the type to just kind of dollar cost average and hodl. In fact, many of you have probably over the last couple of years heavily outpaced people who are actively trading in markets. It could be very well the case. And I applaud many of you for sticking to that discipline. But I think that this is a very fair warning that I want to share with you guys, because I know there'll be a lot of people telling you all the things you want to hear. I'm here today to give you information that, again, take it with a grain of salt, do with it what you will, but I think it's a very important reality check that a lot of people haven't considered. And that is that essentially, if we take a look at Bitcoin against the NASDAQ, so this is a custom ratio, generally determining whether or not Bitcoin is outperforming the NASDAQ or underperforming. When it's uptrending, as in this case, Bitcoin is moving higher. And you can see that during prior bull markets, like back through 2015 to 2017, a massive expansion here. You can see in 2019 to 2021, while there was definitely a big bump along the way, and to 2019 and 2020, we accelerated higher and went to new highs. And we also can see here that if you bought an absolute capitulation during the FTX collapse in November 2022, or really kind of, the first few months, you're still up against the NASDAQ in a pretty good way, right? But I want to talk about a very important concept here of diminishing returns and the idea of passive exposure to one particular asset. Bitcoin back in the day was a clear fire winner. In fact, if you look throughout history, even considering those bear markets, if you're looking at not just an annualized return, but kind of like a 2-3 year annualized return, Bitcoin would always knock it out of the park. It was one of the greatest assets to own. And the yields you would get, or the kind of return you would get from buying and potentially selling, or just continuing to hold, would just far outpace passive investing. And even the NASDAQ, which is really the next best leader here, far outperformed gold and silver, far outperformed real estate, far outperformed the S&P 500. Technology was really where it was at. What I want to signify here is that for the last 3 years, we've been pretty much neutral here against the NASDAQ's performance. And if we're, being honest here, it's a little bit higher, right? I'm not even going to use the absolute wick here, right? We'll give Bitcoin a little bit of an advantage here. It's up 61% versus the NASDAQ from its 2017 highs. But I want to emphasize here that the 61%, this might sound like a big number, but if you really consider the kind of high-to-high expansion versus the NASDAQ by holding Bitcoin, you could buy at the absolute top of the last bull market. And if you waited till the next top, you would be up 900% versus the yields that the NASDAQ was already giving you, which are already great, right? So now we've gone from 900% to, in the last cycle, an expansion of 63%. And this time around, we are not even able to break the prior highs. Maybe that will change in some matter, but this is really entering into uncharted territory. It is very distinct and different. And we have had the time, mind you. We're here in April 2024. That was back in March. It's been over 3 years, right, when we got that retest. Not to mention now, if we're talking about here in September, we've had more than enough time to be able to get above those prior highs and to, again, continue chartering against the NASDAQ. But since then, it has been very unfavorable here if you've been DCAing over the past couple months. Versus, say, DCAing in the NASDAQ. I'm not here to say that passive investing is not going to be your friend. It's not a good disciplinary way to get into markets. I'm saying you might want to consider not just being in one particular asset, not being all in on one bet, not going off of a Michael Saylor speech and saying, I'm going to risk all my net worth on that. That guy sounds smart, right? He's got a big bag of Bitcoin. Of course he wants you to be in the vision like he is. And I think he's very highly convicted on what he stands on. And there's a lot of Bitcoin proponents out there. You're going to have a lot of people like Plan B who are going to tell you Bitcoin's going to $500,000. And you know what? I don't even doubt that maybe one day it could do that. But I don't agree that it's going to happen in a year or two. And I'm just trying to be realistic with you guys, because anyone telling you that is selling you an empty narrative, an empty promise. Unless there's some massive collapse of the dollar, that is not going to happen in any realistic sense. And I think it's quite misleading to a large extent. We have to be realistic with ourselves, guys, that returns are not only diminishing, they are diminishing significantly. And now it's looking a lot like, unless you're buying at the absolute capitulation points here, like going all in there, the yield you get in Bitcoin versus the NASDAQ is really weakening. Bitcoin is effectively maturing as an asset. And the returns that you're going to get of a mature asset versus something that's hyper speculative and new, like Bitcoin was back a couple of years ago, it's going to be very different. It's going to be much less. That's not meaning to be negative. It's just talking about a very important point, which is, drum roll please, we need to look for opportunity in other areas. I'm not saying you even need to go into the NASDAQ. I'm saying we need to look for new market leaders. We got to look for assets similar back to when I kind of like rediscovered crypto. I knew about Bitcoin since 2011, really brushed it off like most people did, lost on an opportunity to make even more life-changing returns. But I got into the markets really again in 2016 and 2017 on the cusp of that next run-up. So it wasn't too late to the party, right? And still was able to capture major life-changing returns. And it was at that point where I was so certain in the asset after doing my research that I was like, oh my God, forget stocks, forget like everything else. How do I get any extra cash that I can just put into this thing? Like, I'm being completely honest with you guys. Like, it was one of those things where I knew at that moment, this thing has got multiples to go. The market size was just a couple billion back then. I was just like trying to find money under the mattress, trying to work as many hours as I could. And then of course started creating content on YouTube around the topic using my years of trading experience. And I was just so certain. I was like, man, I got to just stack positions, because that was something that was easy to DC into or to trade opportunities in and be able to make, you can make 100% returns on altcoins in a day or two. It was so wild back then. And you could just go into the next coin and the next coin. So it's a very different environment from here. And the thing I want to say is that, you know, I've talked to a lot of people. Hopefully just kind of speak one-on-one on this, guys. I feel so many people who are like, hey, I want that too, Nick. Like, I wasn't there in 2017. I want that altcoin season. I want that opportunity to make life-changing money because I got a house I want to buy. I got a family that I want to take care of. I want to put kids through college. I want to go travel the world, right? I want to be financially free. Like, that's all reasonable stuff. And I understand, like, wholeheartedly why people want that to happen and want that opportunity. It doesn't mean, though, that just because you want something like that, that the market is going to provide. And the price action, I hope, here shows you that, guys. I'm only here to tell you that as a friend. I could tell you here, you know, just buy into my favorite altcoins, my top 3 altcoins, you know, which a lot of content creators will do. They dump on you, they make a lot of money, you get caught with the empty bag. I'm here to tell you guys to be smart with your money and to chase opportunities, to focus on smart projects in this space, but to set standards, irrespective of which projects I talk about here, to focus on price action first and foremost, and to look for opportunity elsewhere. There are a lot of really interesting market opportunities in the stock market. Unfortunately, there are, just like altcoins and crypto, there are nearly 10,000 publicly traded companies in the United States that are tracked on stock screeners. It's a very difficult task to know which ones to buy. You know, if you're not just going to be doing passive investing in the S&P 500 and the NASDAQ, which I also think could be a good way of means of exposure to the market, but I don't know if this is really the right time to start. It's quite late. We've had some great years, so it might be good to, you know, maybe be a bit more cautious. We'll see. But the main thing I wanted to talk about, though, is that if you guys are interested in that kind of broader macro viewpoint, if you want to learn about where those opportunities are, we will be talking about them on the channel here in the coming months. We're still searching for those market leaders. We're watching price action right now. But if you're interested in being able to see which plays we're positioned in the equity space, kind of stepping outside of crypto, and knowing which of those market leaders may be out there, I definitely recommend you guys check out the dashboard down below. If you like Russ's content or you like my content, we both contribute to the dashboard. He's sending out a lot of frequent short-term trades and scalps in the crypto space, has been doing phenomenally well. One of the best scalp traders I've seen in the crypto space. Outside of that as well, Russ has got his macro swing plays. He talks about a lot of the silver miners that he's bullish on. He's really big on silver over the next couple of years. I've got a lot of really interesting plays in trends like aerospace and psychedelics, all kinds of really interesting things that we don't really get the time to talk about here on the channel because a lot of people want to hear me talk about crypto, and I want to give you guys the content you want. But I also, for those of you who want to know where to maximize those returns, I definitely recommend you guys check out the dashboard again at the link down below. And the cool thing is, it's like there you can get 20% off if you sign up on an annualized basis. Irrespective, if you want to try monthly or annual first, it's less than a cup of coffee a day. It's a great way to support the content here. And if you guys want to get mid-month webinars, the 20-page newsletter that we put out each month, we just are dropping, I think, today. Should be getting sent out. We have the mid-month webinar where you guys can ask me questions. We have the alerts group for both Russ and I, and you also have as well the discussion group where you get to meet all of the brightest minds in our community sharing their ideas on all these different markets. That could be a great way not only to support the channel, but to get that extra kind of cream of the crop content and oversight about where I'm positioned, where I'm seeing the opportunity. We also send out exclusive market updates as well, so I'll try to send out usually like once or twice a month just to kind of give people some additional updates. But again, above all, these are the things you guys would get there in the dashboard. It's a great way to support the channel and to get more involved in those things. And again, you can try it out monthly, see if you like it. We also have some indicators as well that we share, like the red blue line indicator we used a long time ago, the multi-time frame moving average that we utilize, all kinds of really good stuff we can get you set up with. But that's it for today's video, everyone. I hope you all enjoyed it. If you did, consider dropping a like. It's a great way to support the content here on this channel. And above all, keep in mind, guys, that we don't want to be too overly bullish. We don't want to be overly bearish. We just want to lean into price here. And to me personally, the price is telling us that we've got a chance of coming down to that 200-week moving average for some kind of flash crash low. And from there, the game may change. We might get serious accumulation, a reoccurrence of inflows, new narratives might come to the market. But I think we need to be fair and honest in saying that right now, things are not looking to, at least be at a point where there's optimism enough to go long on the market in any significant way. We just have to be careful here, guys. But that's it for today's video, guys. I'll leave it there. Check out Russ's videos later on this week. I might be putting out an upload on Wednesday as well. We'll see. But I hope you guys have a phenomenal rest of your day, and I'll see you all in the next video. Take care, everyone.